spoke about the risks in the global setup and how emerging markets are positioned.
It's a big risk factor. Right now, it's impossible to call. I think the risk for the UK is that a vote for Brexit could, in the short term, trigger quite a nasty jolt to the economy. So we would likely see growth diminish, possibly into recession territory. Now, the thing is, at the same time, we would be likely to see a strong depreciation of the currency, which would push up inflation. So you'd have a nasty bout of stagflation. The markets are cheerleaders for the Fed doing the right thing. So they don't necessarily want easier and easier policy. There comes a point at which they start to think, hang on, what about the longer term implications of this? Is the Fed stoking up inflation, which it'll then have to respond to in quite an abrupt way? And also, is it maybe stoking the potential for financial instability through too easy credit for too long? I think right now the market is still greeting, a dovish Fed positively. Over the very long run, emerging markets do offer, superior returns, albeit with higher risk associated with that. I think right now the question that one needs to ask in terms of should I be buying emerging markets, should I be overweighting them in my portfolio, is whether the coast is clear in terms of crisis risk in emerging markets. And the two potential catalysts for that are, one, that the Fed tightens too sharply and disrupts emerging markets, as it has done in the past, actually. And second, that the Chinese economy disintegrates in a very serious way. Now, our view at Neptune is that over the course of this year, both of these risks have receded.
Okay, well, the market is still at the low point of